Hey guys, welcome back to Smart Trader. This is Dice Paul and thank you so much for all your love and all your support. If you are a new viewer to this particular channel, then you can go and watch all these videos, and if you're liking it, then you can hit the subscribe button to be a part of the Smart Trader family. And for the ones who want additional services, always WhatsApp to 7892652481. And for the ones who wants to be part of my secret Telegram channel, you can click the link in video description and open your Demat account in Zerodha, Upstock, Angel Broking or Alice Blue. So without wasting time, let's look into today's topic. So today's topic is more about two different types of market. One is the trending market and another one is the range bound market. So these are the two important markets which are commonly discussed. So how to react based on these markets, or how to look into this market, understand what the market situation is, and then how to take advantage is what we are going to discuss in this particular video. So generally what happens, a lot of people say that okay, few days we get more than 0.3% target, and few days we don't get 0.3% target, won't even 0.3 won't achieve, right? So some days maybe 1%, 2% the stock is going and going and going. That time we target 0.3, but when we go back of 1% and 2%, that day the stock may go 0.5%, 0.3%, or may not, even 0.3% may not be achieved on that particular day. So how to try to assume that this can happen or this cannot happen, at least some method or trick to identify this. So for that reason, what you can do is, first you need to understand there are two types of market. One is the trending market and one is the range bound market. So trending market is basically the stock is either going up or the stock is either going down. Basically the stock is moving higher highs and or lower lows. That is nothing but the stock is going up or down is trending market. Range bound market is certain range is there. For example, let's say the stock is moving in certain range, it's touching here, coming down, and then again touching up and coming down. So somewhere in a certain range it is trading, not just going up overall or not just coming down overall. So this is range bound market and trending market. So if you try to identify these two, this will help you a lot in either intraday trading or in short term trading also. All right, so for example, I've taken the example of Nifty 50. Okay, so Nifty 50 chart, I'm just applying a 15 minutes chart with an RSI. So if you see overall from few days, let's say the date is February 16. From February 16 onwards, you see the market trend is somewhere a trending market. So basically a downtrend, DT. I will just write DT for namesake. So it's a downtrend. It is just falling down. But in this particular situations, if you would have shorted, if you are waiting, let's say for 0.5, 1%, 2%, you could have achieved in this particular market. Let's say from 16 till 22nd, you are getting higher profits. Maybe 1% you are targeting, 2% you are targeting. You're easily getting this particular profits. Okay. Now let's say you're taking a top gainer or top loser from Nifty 50. So those top losers are contributing in this fall because they are falling overall. Nifty 50 is a combined, right? So it is overall falling. That's the reason you're taking top stocks. The top falling or top selling stock or negative stock you took, and maybe you achieved more than 1%, 2% in that particular day. So this was a trending market. So you can go for a higher target in a trending market. But let's take an example here. So in this particular case, so you see almost it went sideways. Now in this market, if you would have done selling or buying, maybe you would have not achieved 0.3 also, or maybe you would have achieved 0.3%. But if you would have thought it will go up, it will come down of 1% or 2% what you used to get, it would be difficult in this particular situation, because if you see the previous market, the overall trend was upside, right? So it is overall going upside, still going upside, and slowly it was getting a bit of range bound and again a range bound over here. So in this scenario, considering that it is a trending market, you would have achieved daily 2%, 1%, 1%, 2%, more than 0.3% every day. Suddenly from these days onwards, you are not making much profit. Maybe you're waiting for higher targets and the stock is not moving much. And because of this reason, maybe later the stock came down and then you booked a loss over here, right? So the major thing was you didn't try to understand what the current trend is. Is it overall going up or is it coming down? So overall the trend was upside. You would have got more advantage. When it is consolidating or going sideways, range bound market, you need to book either 0.3, or it's good not to trade also, because it's a little bit risky when you trade in range bound markets. But when the overall trend of the market is uptrend, and after uptrend you can see a downtrend, So in this case, you see after an uptrend, there was a little bit of sideways here and there, and then it is currently a downtrend. Now let's say I'm using an RSI with 70 and 30. Overall, it has come to a lower level. At one shot, it can go a little bit, trail a little bit, and then finally recover to go up. So maybe it may go sideways for a few days, maybe. Okay, maybe today or tomorrow, day after tomorrow, it can still go until unless there is no bad news to the market or profit booking is not happening. That time, if you try to short for 1%, 2%, again you will get lost over there. It may move 0.3, 0.5%, and slowly again an uptrend will start, and then you will start booking upside, buy side, 1%, 2%. Again, it may go sideways. So you need to understand the cycle, that there is a trending market, and after some time a range bound market comes in, and then it breaks the range, and that's when a trending market gets created, either upside to a bullish side or a downside to bearish side. So understanding this ups and sideways and downsides, you can push your target. That's how you get a rough idea that currently the market is an uptrend in certain level. Let me go for a higher targets. Today market is going sideways. Let's say today the market, overall day the market is going sideways, so let me book 0.3 or let me not trade itself. So like this, you can take up your decisions based on your targets. So these are the two different markets which you need to understand, the trending market and the range bound market. In a trending market, you can achieve higher targets either in the upside or in the downside. In a range bound market, you can either go with 0.3% or you can avoid trading, because there are chances where you may not get even 0.3. So try to put some efforts to understand, because trading is not so easy. A and B and C always, it is a mixture of any alphabet. So you need to be ready any day. So you need to first read the situation of the market and then take some action. So at least your chances of losing will reduce. So going forward, before you jump into any trade, do some little bit homework. Like I told you, just an idea what I've just told you. Try to read the market and then take a decision for that particular day. Hope this was an add-on to your knowledge. Please do hit that like and subscribe to this video. See you soon in my next video. Till then, take care. Bye-bye.